Everyone wants to know kind of what your thoughts are on kind of the macroeconomic outlook, and more importantly, is this an environment for investing that is going to get more challenging?
Yeah, I think we're seeing markets that are transitioning. The public markets have obviously experienced sort of a difficult 4-month, kickoff to the year. The question is, do the private markets follow or not? A lot of what we do in real estate and credit and in private equity is oriented away from the public markets. So we're taking a bit of a wait-and-see approach. We want to collect more data.
But some of the things affecting the public markets right now with regards to the inflation and supply chain issues you mentioned, I would assume would also affect a lot of private companies as well.
Yeah, I mean, all companies will have the same impact, public or private. You tend to see more volatility in the public markets because you have trading prices, right? You have QSIPs. The private markets tend to take a little bit of time to adjust, but I think with some of those operating conditions, as well as higher rates, folks in the credit business and in the equity business, certainly in the real estate business, are saying, where are valuations headed, or valuations coming down? But we see pretty broad strength in our portfolios today, continuing despite some of those considerations.
As far as new investment opportunities, when we talk about the public market, there's a lot of talk about finding quality here. What does quality look like in the private market?
Yeah, I mean, it's similar. We tend to put a lot of our emphasis on growth at a reasonable price, credit, real estate, particularly in defensive sectors and defensive parts of the real estate market. So for us, it's a little bit feeling, if we're going to see some changes, take a wait-and-see approach, make sure we're cautious, and as I was saying earlier, perhaps see another card or two as we see things transition and develop.
How does the cost of capital change, though, when we look at benchmark rates now at 3%? Most people, they're going to think they're going to continue to go higher.
Yeah, financing's more expensive for companies. It's more expensive for people. Mortgage rates are up. Credit card rates are up. All of that. It takes time for that to spill through and show an effect, but we would expect it would.
Do you think that investors, I guess, more people come knocking on your door in times like these, as opposed to when rates were?
Yeah, it's a great question. I mean, even if we're transitioning a little bit, we need to re-rate. Because of what we're doing in private credit, we're delivering a lot more certainty, right? So when there's volatility in the public markets, we become a haven for folks who are looking for certainty of closing, very sure expectations around pricing, because all of what we're doing on a buy and hold basis for the most part. So we're taking a longer term view. We may want to extract slightly higher pricing or slightly better terms, but we provide certainty in volatile markets.
I'm curious about high yield and kind of where that falls. I mean, a lot of people have been keeping an eye on high yield because they're looking for that canary in the coal mine. So far, it's held up. It's not necessarily doing great, but it's held up well. Do you think that it will continue to hold up?
So what's interesting in high yield is most of what's happened, because it's long duration, fixed rate paper, it's responding to a changing rate environment.
Okay.
Right? If you look at the actual credit performance, to your point, it's actually pretty good.
Right.
And when you look at credit spreads, they really haven't widened all that much in high yield at all. It's really the effect of rates.
How much floating rate is out there in that space right now?
In high yield?
Yeah.
Very little. It's almost all fixed rate. So when you look at that with the loan market, which is all floating rate, the syndicated loan market, that's performed quite well, relative to a lot of the other things that you could have been invested in credit.
Yeah. When you look at the pandemic and coming out of the pandemic, everyone was talking about these big secular trends that took place in our behavior as consumers, the behavior of companies and their business spending here. What changes do you think are probably going to last and persist and be, I guess, longer term investment opportunity?
Yeah, it seems like people have changed a little bit their philosophy about where they work, and if you're a little bit younger, how much you work. We'll see how long that can last.
Yeah.
I think everybody's excited to be here, especially at a conference like that, like this. Lots of gatherings, seeing people. We've all been expressing so much gratitude about that. So I think we want all of this back, but people actually found some things during COVID that they value, whether it's more time with family or a little bit more time to work from home or work from somewhere else. And I think that is a lasting phenomenon, not going anywhere.
What about your employees? Are they all mostly back in the office?
Yeah, we're kind of back 4 days a week is what we're pushing, Monday to Thursday, and we're seeing really good participation in the office. It was actually trickiest here in Los Angeles.
Oh yeah.
Because the city was difficult about, COVID and getting people back. But yeah, in New York and in London, which are two other large offices, we've been back since September of last year, pretty much full on. And the travel schedule's picked back up.
A big topic of conversation, of course, has been the race for talent. It doesn't matter what industry you're in right now. trying to find good people is going to cost you a lot of money.
Voracious. I mean, we spend a tremendous amount of time thinking about our first and foremost asset, to your point, our people. We've been fortunate in that we've had great retention. Our company's grown tremendously since I've been here for 18 years. We've been able to keep offering folks more and more opportunity, the ability to advance their careers, continue training, learning, feeling excited about what they're doing day to day, but it's a constant concern. And we think about how do we retain the best people, how do we attract great new people, and it's as difficult as it's ever been.
All right, you've been at a lot of these conferences here. What's I guess been the highlight for you so far at the 25th anniversary of Milken?
The highlight so far is we've got, frankly, a bunch of people at Aries from around the world, come over from the Middle East, from Europe. Some of these people I haven't seen in 3 years. So reconnecting with people that I haven't seen in a long time has definitely been the highlight.